Assalamu Alaikum everyone, welcome back to another video. I hope you're having a great day. Right, so today's video we will be looking at one of the companies that I own in my portfolio. We haven't spoken about it in a while. We just want to see, based on what's happening in the markets right now, see if this company is actually a buy, if it's a hold, and so on, and give you like an update. We've done a video before, I'll share that with you as well, but I want to see since the last earnings and since the drop that we've had, or the correction we've had in the last few weeks, I want to see if this company is actually a buy again, if I should add it to it, or if I should not, if I should sell it. Let's talk about it, right? I'm just looking at the markets just today. The markets just opened not long ago, and as you can see, there's a lot of down days. I mean, the banks are still in trouble. And obviously that includes Visa and MasterCard and whatever at the moment. But yeah, look at Tesla, almost 2.5% up today. It's killing it. Home Depot, the lows are doing all, some of the oil companies are doing all right. It's a mixed, okay? It's mixed again, but the majority of the tech are absolutely down, and the banks, and that's been the usual in the last few weeks, okay? The company that we're going to look at today is a KLA Corporation. This company is in the semiconductor business. They make the equipment that is used in the semiconductors to make the semiconductors, the semis as well. So now what we want to know is from year to date, so since the beginning of this year, okay, how this stock is doing. So since January the 3rd up until right now is down almost to 25%, 24.48%. Last 6 months is down just about 3 and almost just about 4%. Just this month is down about 12.52%. And just the last 5 days is down about 5%. So as you can see, it's actually down quite a bit from where it was a year ago. So from January the 4th. So it was 431. So it's lost over $100 just in the last 3 months, okay, since beginning of January. And it made me think, okay, I'm in the red right now, so I want to see, okay, if I should add to this company or not. And that's KLA Corporation. As you can see, I'm down 7% or £100, so I want to see if I should add to this stock or not. So let's have a look at the financials. Let's have a look at the latest earnings report. This was reported on the 27th of January 2020, and that was the last quarter, basically fiscal year was 2022. So we want to see how the company is performing, okay? And you can find this PDF in their investor section of their website, okay? Every company has one of those. If you are new to investing, just go to the company's website, go to investor section, and then you can find anything. You can find the latest reports and so on. So there's a lot of colorful things going on here, okay? But I just want to basically touch quickly just the main things that I want you to I think we should focus on, and that's just the numbers and what the company does and how successful the company is doing. So that's the performance and the guidelines for this month. That's what we're interested in, okay? So the calendar year 2020 highlights, and that's what we're looking for, okay? Right, as you can see, for the last 6 years they've been growing their top line revenues. So revenue growth is 34%. Okay, now they made 8.166 million or 8.8 billion basically, okay? And then just for the year that we're talking about, right? And then free cash flow is up 43%. The gross profit is up, gross profit growth is 37%, 61% for EPS growth, and profit growth and operating profit growth is 54%, and they've returned this much in dividends and paybacks. So this for me is the most important part in any financial details, because this shows me that if you grow in your top line, if you grow in your revenue, you grow in your sales, you're making product that people want to buy, you grow in your profit, okay, so the gross profit, you grow in your free cash flow, you grow in your EPS per share, the profits, and you then buying back shares and paying dividends. How does this help us? So you get dividends, you obviously receiving free money no, it's not free, but you invest in the company, they give you your money, then you can take that money, reinvest in that same business or another business, then to generate more dividends and so on for yourself. That's one thing. The buybacks are really important because if you own one share of a company, like from KLA, for example, and they buy back their shares, your shares now worth more. When companies dilute and basically issue more shares, they dilute in your shares, so your shares is no longer worth what it was worth before. And that is really important, and this is why buybacks are important. I'd hate when companies buy back the shares when the stock is too expensive. But if you see a great company buying back their own shares, then that means they believe their stock is actually worth more. And that's something to pay attention to. And this one is just for the quarter, so you can see everything from there. So it's in terms of operating profit, in terms of gross margins, in terms of free cash flows and free cash flow conversions, everything is basically heading the right directions, absolutely. Okay, and then you get a breakdown. So these are the things that they do. So the semiconductor processing and specialty semiconductors, PCB displays and component inspections, all of these things. Remember I said this company, they don't make the chips, they actually make the equipment that's used in the chips to make those. Okay, and in fact I'm going to show you in a second where the majority of their revenue comes from. And if you look at this revenue here, look at Taiwan. 33% of their revenue, okay, came from basically last quarter from 33% of Taiwan. The reason for that is because you got Taiwan Semiconductor and you got another big company out there. I can't remember the name now. Okay, in Korea you've got Samsung, you've got Japan, you've got rest of Asia, for example, you've got China. China is now trying to diversify and try to get into the market and the semiconductor markets. Europe only 7%, and then only 12% in the US. Now, let me tell you this is going to change because US is now trying to diversify and go away from Taiwan and compete with China hopefully soon. Okay, and that's one of the reasons why Taiwan is now building basically a factory in the US. Intel came out recently, and I think if I'm correct, they're building 2 new factories in the US. So this is definitely going to increase because where these companies going to go, they're going to go to KLA and get those products from them. So in order to be able to run these places, okay. And again, like we saw early, you can see consistent share and repurchases, and you can see every single year in the last few years, basically they have been doing apart from 2016. And it's growing and growing. It's actually getting bigger every single year, which is quite nice. It's actually went down a little bit not long ago, but it's heading the right direction. Okay, that's what you want to do. You want companies to buy back their shares, and you want them to pay you a dividend. So that's 16% CAGR, which is really good. So they used to pay basically just $0.50 in 2006, and right now they're paying about $4.20 per share that you own, which is really a massive growth. This is amazing. Okay, so company that is growing top line, bottom line, paying back, buying back their shares, paying you dividends, okay, is heading absolutely the right direction. And the final thing I want to share with you here, and that's, like I said, you can find this on their website if you want to read it, the whole thing. KLA operating model continues to guide us, and it's a global leader, so they want to be a global leader. The sustainable technology leadership, competitive moat, amazing. This is what I love to see. Experienced and an energized leadership team and track record of strong cash flow generations, which is really good. This is what I want to hear. This is what I want to see. This is the kind of company I like to invest in. And I love technology, so I understand a lot more than what basically the business model, and that helps me a lot. Now, the next thing I want to show you is just the financials. Okay, let's break it down now, whatever we've seen. So the market cap for this company is $5 billion. They're currently trading $333 $30, sorry. They have a PE of 16. The market, the sector is 30. They have 16 PE, which is absolutely amazing. Look at EPS, earnings per share, of almost $20, okay, which is absolutely brilliant. They have a wide moat, which is great. That means they have a competitive advantage. Annual dividend yield of 1.26 is heading the right directions like we saw early. They have 5-year growth rate, 12%. Dividend growth streak, 16 years they have been increasing their dividend. Payout ratio only 21%, which is amazing. So they have, from their net income, they're paying us dividends, okay, and that only is about 21% of that net income. They're using that to, the rest of it, they can buy back shares, they can purchase other companies and whatever. Dividend safety is a 71%. Free cash flow right now, they have $2.5 billion in the bank. The beta is above 1, so they're slightly volatile, and it is quite volatile stock, I'll be honest with you, because some days is like I'm in the green and next minute is in the red. So it's quite a volatile stock. Current ratio of 2.41, which means anything above 1, okay, that means they can pay their debt or liabilities, okay, straight basically within the next 12 months. So they have enough money to pay off their debt in the next 12 months. So they've got enough money in the bank. Profit margin of 37%, return on equity of 85%. Now, quarterly revenue growth year on year. So this is basically the revenue, okay? So basically remember, it's quarterly revenue growth year on year. So a year ago, if you look at their revenue from a year ago, it's actually now, and compare it to the current one, it's actually grown about 43%. Same goes for the earnings, 57%. And this is important. This shows you the company is making money, is growing that top line, bottom line, both, and is actually heading in the right direction. Okay. Then you've got growth estimates for the next 5 years. So the earnings growth, that is about 21%. So you basically gain the earnings growth of about 21% every single year in the next 5 years. That's according to Yahoo Finance. In terms of valuation, right now, according to Simply Wall Street, is 26.8% undervalued. Their target price is $453, and it's a buy. Okay, from me, that's definitely a buy. Fair valued, according to Morningstar valuations, they expected the price to be, by the end of the year, $396 per share. Tip rank is slightly higher, $455 per share, and it has 37% upside, because currently it's trading $327 per share. So yeah, everything basically takes in the right boxes, and I mean, it's a great business. They have a great business model. They have a mode. They have a competitive advantage. They've got free cash flow. They're heading in the right directions. I love the fact that they pay dividends as well, which is quite amazing. And just to show you quickly, they have a white mode there. As you can see, fair valued according to Morningstar. Tip rank is quite similar. And when you look at the Simply Wall Street, you can see safe dividend. Not simply safe dividend is basically 71% safe. Okay, and you can see their dividend growth basically is actually growing really fast, which is very good to see. All right, so the final thing I want to talk about is the fact what I'm going to do with this stock right now. It's down 7%. So I made a decision starting this week, going forward, I will be adding to it every week. So I'm going to buy a little bit, however small, I'm going to add to it in the next few weeks, because I want to have at least 10 to 15 shares. Okay. So because the markets are very volatile at the moment, and as you can see, I think it's down today again. There you go. It's down, yeah, just less than 1%. But it's been consistently going down. Like I showed you earlier, it has been hit really hard in the last few weeks. So almost 24%. In fact, this is good news for me. So it gives me the opportunity to add to it, because at one point I think I had almost a £300 profit. And at that point, it was so overvalued, I couldn't even touch it. Right now, it's coming back to fair value. It comes back to undervalued according to different websites. So I'm definitely adding to it in the next couple of weeks, starting this week. I will be buying bit every single week. And then when I do my updates next time, hopefully you will be able to see that. Now, if you enjoyed this video, remember, this is an update video. We've done a video of this basically for this company before, just to analyze the whole business itself. So check that out if you're interested. I hope you like this kind of content, and if you do, please like, subscribe to the channel. Let me know if you have any questions. Assalamu Alaikum. Take care.